could you just level set for us of what you're seeing in the markets right now, and some of your projections from GTM's perspective?
Absolutely. Thanks again. So first of all, obviously, we got into this pandemic in towards the middle of March earlier this year, and a lot of the states have since then been in different forms of shelter in place, have had implemented different forms of shelter in place policies. So what initially started off as a supply constrained situation coming out of China has over the past several weeks turned into more of a demand situation. Now, as a result of the such shelter in place, as well as a lot of the unemployment numbers that we've seen, we do expect that U.S. As a nation would see negative GDP growth this year, and the direct result of that negative GDP growth is going to be felt by the solar industry as well. So prior to the pandemic, we were projecting that U.S. was going to have a blockbuster year. We were expecting about 19.6 gigawatts of annual installations, most of them actually being the utility scale segment. Since then, we have lowered our forecast. The forecast actually hits the distributed generation segments pretty drastically, where both the residential and the non-residential segments are going to be lower by about 31% versus the previous outlook. However, the utility scale segment for the time being seems fairly well insulated, and we've only sort of reduced the forecast by about 1%. So, taking all the factors in, our current projection for 2020 is a little shy of 18 gigawatts, with, as I mentioned earlier, the residential and the non-residential segments facing the bulk of the downward reduction.
Got it. Thank you so much. Can you talk a little bit about what's happening in tax equity right now? What are you seeing in the market?
Yeah, so there are kind of two aspects of that. The M&A markets definitely slowed down in March when we kind of hit some of this uncertainty and things going forward. But we are seeing that loosen up right now, and we are out in the market with several opportunities, a lot of asset sales, a lot of platform sales, and that seems to be picking back up and certainly generating a large amount of interest. So very positive there. Folks are still looking to deploy capital, still very hungry for the space. The tax equity markets are a little bit on pause right now. I think we're seeing the main investors in the space continuing to go about business as usual. But a lot of the smaller players and a lot of the kind of non-traditional tax equity are still on pause as they figure out what their 2020 capacity is going to be and their 2021 capacity. Summertime is always a little bit slow in these markets anyway, because they're trying to kind of manage that supply and demand imbalance and make sure that the tax planning is done properly. And I think we're just seeing that amplified right now given earnings uncertainty. So, hope to see that start to loosen up kind of in Q3, Q4 as we move forward.
The fundamentals for renewables are really strong. I think one of the things that the COVID-19 pandemic has really highlighted is when you look at the need for grid resiliency, for new technologies out there. You think about what happens with if there are large shutdowns of hospitals and they need backup power and storage and those types of things. You look at the carbon footprints and you look at pollution numbers. And so I think folks taking a step back and really looking at, clean energy and their role. I mean, this was the first time recently that I believe clean energy renewables took over coal from a total generation standpoint. And there's still so much more room for growth. I think, once we get past this, this pandemic, the market adjustments, the delays in construction, I think you'll see another, a large uptick in renewable development. I'm seeing a lot of, companies that have large balance sheets and are flush with cash and aren't highly leveraged. They continue to be aggressive. I know Britta can talk a little bit later on the M&A side. But you're seeing some of the larger players are business as usual. Some of our biggest clients are developing like crazy and moving ahead and acquiring projects, early stage in developments, because they have the ability to. They don't have as much competition as they did probably 6 months ago because of the size of their balance sheet. So, like I said, I think the fundamentals and trends are strong. And I think long term.
I wholeheartedly concur with Anton's analysis. If you go back to the financial recession of 2008 and 2009, one of the more remarkable dynamics that took place then was the extent to which renewable energy actually gave America hope. It's no small coincidence that the solar industry in particular, but certainly renewables in general, thrived at the worst time in American economic history prior to the current virus. And I think we're starting to see that again. As Anton indicated, even though I don't believe it was intentional, I think it was some sort of divine intervention that the Office of Comptroller of the Currency recently updated its guidance with regard to the Community Reinvestment Act, the CRA, as it pertains to investments in renewable energy and in particular solar. That had been an effort that had gone on for quite a while, well before we even understood there was such a thing as the COVID virus. But it's recently been finalized. And so when we fast forward to today, as Anton indicated, and look at the legislation that the House Democrats dropped in bill form yesterday, H.R. 2, the Moving Forward Act, that act has a host of truly remarkable pro-renewable changes, which, if even some of them ultimately become law, will continue to be critical for the renewable energy sector. But tying to the CRA and the OCC issue, among the proposals that the House had put in its infrastructure bill are specifically proposals to incentivize investment in clean energy for low-income and underserved communities, which includes grant programs for solar installations in low-income and underserved communities, as well as funds for renewable energy installation and community institutions such as schools. So that itself is something very critically important, but it's even more interesting in the broader context because, as Anton indicated, as currently drafted, and again, we have a lot of politics to go through and an election to deal with, and there's a whole host of reasons why many of these things might be delayed or ultimately not make it into final legislation. But as proposed, there's a very substantial provision for things like extension of the production tax credit, extension of the investment tax credit at the current high rates, or even previously higher rates. In addition, there's a investment tax credit proposal for standalone storage, publicly traded partnership, master limited partnerships that would allow renewable energy assets to be included in publicly traded partnerships, which could be a game changer, depending on how it's ultimately plays out. There is also a very interesting feature that is specifically designed to deal with the economic harm being experienced by small solar companies, which is a option to convert the tax credit, the PTC or the ITC, into a cash option through a refundability feature. A lot is yet to be learned about how that would work and whether, in fact, that good idea, as some think it is, would actually work from a financing perspective. But there's some clearly pro-renewable policy placeholders that have been put in as markers. Again, I think going forward, particularly after the election, presuming there'll be some significant change, whether that's change in the White House only or shifts in balance of power in the Senate in particular, I think, again, the fact is that renewable energy does continue to give America hope. And I think we'll see more and more federal legislation in support of renewable energy, even if at the state level, the economic impact, the budget shortfalls are not as empowering of the states to do it. We may very well see this as a way for the federal government to step in and help state economies by providing federal tax policy support for renewable energy if the states themselves can't do it. So at the very top level, that's sort of what I'm seeing. But again, very encouraging.